Hey guys, hopefully everyone is doing well. Today's target is to understand question number 25 by sequence. It might be 14 or 15 question. The chapter which we are related with is financial statement. As usual, we do have two parts. First, you can see there are two columns, several elements are present over here, and then we have 10 adjustments. Relatively lengthy question it is, but you will have to be focused. Second thing, you can see that no totals are available. Either side, no total is available. No heading is available. It means debit and credit side are mixed. So it might be possible assets are present on left side. Maybe assets can be present on right side. Similarly, liabilities, expenses, and income, everything has been mixed. So guys, in this way, you will have to be focused and you will have to see which element is related to which part of financial statement. Since we do have two part, adjustments are also given. We are very clear about our goal that these adjustments would be solved as our first step, and secondary way in second part we will be transferring these elements to financial statement. After this brief introduction, you may have this performer where there are four parts: left side 2, right side 2. Right side balance sheet 2 parts, left side profit and loss statement 2 parts. In above side, this is your direct side where gross profit would be calculated. In lower side, net profit would be calculated. Right side balance sheet asset and lower side balance sheet liability, which would automatically be equalized. After this brief introduction, we are now ready to start our question. So let's begin with adjustment, as it was told that it would be our first step. First adjustment is closing stock. So here in cost of goods sold, first we will write opening stock, then we will add purchases, and then we will subtract its returns, then closing stock. All right. And here we are talking about closing stock, amount of which is 21,000. So just put 20,000 over here. You know that adjustments do have two effects. So closing stock we have written in cost of goods sold statement in the similar way 21,000 in current asset side. So two effects or dual effect of this first adjustment has been completed. We will now see our second adjustment, which is unearned commission. Since it is earned or unearned, that is why we will consider it as income. We will go to other income side. Here you will mention commission, and since it is unearned, we will subtract this commission from here, and amount of unearned commission is 2400, put over here. And for second effect we will go to liability side because it is unearned or not earned commission. Amount is 2400. So after that you can see that two effects, one on left and one on right side. Unearned commission we have completed. Next is interest on capital other expense, and here you will calculate interest on capital. Over here you will see how much amount of capital is. Since I was telling you all of the amounts are mixed, so capital here we have found out 150,000 amount of capital and at this place 150,000 of capital, then multiply percentage, we'll have to see it again. It's 5% capital, so multiply by 5 divided by 100. calculation of interest on capital. What this 150,000 is? This is amount of capital, then multiply by 5 divided by 100, 5%. Interest on capital we have calculated, so we will go to fixed liability side. This was fixed liability, and here you will write your capital, then we will add net profit, then we will subtract drawings, and we have got another factor, interest on capital. It would be added. Interest on capital, amount of which we have just calculated, that is 7,500. So put amount in front of it. As usual, you have seen that there were two effects, 7,500 here and 7,500 over here. In this way, three adjustments are completed with all of their double effects. Now number 4, interest on drawings. It is your income. We'll go to other income side, and here interest on drawings would be written. The amount is mentioned. We do not need to calculate. 240 is amount of interest on drawings. Look at here. All right. So interest on drawings, it's our incomes. Interest on capital would be added, and interest on drawings would be subtracted, and amount is 240. So as usual, two effects completed, one on the left side, one on the right side. This way 4 adjustments are completed. Now number 5, advertisement expenses paid in advance. We will go to operating expenses. Here first we will mention advertisement, then subtract prepaid. Amount of prepaid is informed in the question, and that is 15,000. So put 15,000 over here. Prepaid expenses. Secondly, we will go to current asset side, and here prepaid insurance would be written. It was prepaid advertisement. Okay, 15,000 is the amount. Write down. And here let's edit. This is prepaid advertisement. Alright guys, two effects completed for number 5th adjustment. Now number 6, stock valued 9,000 destroyed. Insurance company is providing 6,000 rupees. Since loss when it is due to fire, theft or accident, entry is loss by fire to purchase. That means we'll have to decrease the amount of purchase. So at this stage we may consider it loss by fire. Amount of loss by fire is actually 9,000. Put 9,000 over here. Secondly, you can see that insurance company will be paying in future 6,000 rupees. Or look at here, 6,000 admitted a claim. That means they have admitted 6,000 would be paid in future, but within this year. So it is receivable. We'll go to current asset side, insurance money for loss by fire, and here let it be corrected. It is insurance, and that is money. Insurance people have said that they will be paying 6,000 rupees. Now you can see that actual loss was 9,000. Insurance company is paying only 6,000. So what had happened? Or in operating expenses, you will mention that loss of 3,000 rupees. Actual loss by fire is 3,000. Understood? Once again, I'm telling you, 9,000 was loss of stock. So our purchases has been decreased. Loss by fire to purchase, but between it was money, but insurance company is saying we will compensate up to 6,000 rupees. So 6,000 rupees we will receive, it is receivable asset side, and remaining 3,000 was actual loss, and it has been mentioned in operating expenses, loss by 5. In this way, we have completed adjustment number 6. Now 7, general manager is entitled to commission 10% of net profit. Since we have not calculated net profit, so we will wait for calculation and then we will come back to see this adjustment number 7. Now adjustment number 8. Included in sale is an amount of rupees 30,000 representing goods on sale or return. So it's very interesting topic. Sale or return means you have placed your product in any mega store and you have made a, a contract with them that if you will sell this product, we will receive the amount, and if you will not be able to sell this product, we will take back the possession of the product. I'm sure you people understood this word sale or return. Now most important part is customer is still having right to return. It means customer had not sold these products, so that particular mega mall will return these goods. Now next, when you have sold this commodity for 30,000, obviously you will sell it for a reason. A reason is your profit, that is 20% on cost. So first we will see how much cost is. For that, here we will be making sale would always be equal to cost plus profit. And here in our entry, it is said that you have sold for 30,000. So 30,000 and then is equal to cost is unknown, we may write C, then plus profit is mentioned over here, and that is 20% on cost. Please understand this word, 20% on cost. So here you will write 20% means 20 over 100, that means 0.2 of cost. Next is very simple. It's a mathematical statement and you can solve it. When there is nothing with any variable, that would be 1. So you may write it as 30. Okay, we can copy it to save our time. So what you can do, you may write 1 with it. Now next step, 1C plus 0.2C. What you will get? This would be 1.2C. Understood? 1C plus 0.2C. When you will add, you will get 1.2C. Now, next step, 1.2 is being multiplied over here. You want to take it to the other side. So what will happen? It would be divided. So C is equal to 130,000 divided by 1.2. We have sorted out. Let's calculate 130,000 divided by 0.2, and instead of point it was comma, let's write point. So we have, okay, it was 30,000, one was extra, here we have put, and now again it was 30,000, 1.2. So it was delayed due to typing. Now again see, there was 30,000 on left side. You have taken 1.2 which was being multiplied with C. When you will take to the opposite side, it would be divided. So 30,000 divided by 1.2, we have got 25,000. What it is? C. C is what? Cost. Now the second step. Price is sale. When your customer is returning it, it would be considered as sale return. So you will go to your direct income side, and here first you will mention sale and less sales return, because your customer is returning it. How much amount? 30,000. When customer will return these commodities, your stock would be increased. So here you will be taking it back, returns, and you will add. But now please understand, when you will write return in terms of sale, it will include profit. When you will include it in your stock, that means you are adding in stock, that would be added on cost. So 25,000 would be considered over here. In the similar way, you will be having their dual effect. First, since they are now returning, due to this return, let us make a little space over here because it is related to closing stock. We are now making a little space, single line. Here you will also add this return because customer had returned these commodities of 25,000, and you will put 25,000, and here 21,000 was actual amount of closing stock. One effect is completed. Now look at 30,000. Its second effect is also needed. When customer had returned, what does that mean? At the time of sale, you were supposed to receive amount from your customer. So he was your account receivable. But since they have returned these commodities, it means he is no more your account receivable. That means decrease in debtors. So here you will mention sundry debtors, and you will subtract returns, amount of which is 30,000. Alright, now here your attention is needed. 30,000 first effect, 30,000 second effect, 25,000 first effect, 25,000 second effect. In this way, our entry has been completed. So if you want to understand it more, please revise and repeat this lecture for last 5 minutes and listen again and again so that you can get the accurate understanding what we have done. So 30,000 effect first and second, 25,000 effect first and second. In this way, our 8th entry is completed. Now 9th entry. Closing stock include goods of worth rupees 3,000 of which invoices have not been received. It means we have not entered. Again, it is related to cost of goods sold statement, and we must have another line. So let's make a place for this entry. On the other hand, please understand what we are going to do. You have purchased some commodities, but you have not entered. So it means you will now be entering these commodities. If you purchased commodity, entry would be purchased to creditors. Purchase to creditor means purchases are being increased. So you will add invoices. These are actually ads and we don't need them. Okay. So what we are going to do, add invoices. How much amount of these purchases? 3,000. So you will enter 3,000 over here. Next step is what? Purchase to creditors. That means creditors are also increasing. So we will choose to current liabilities, and you will write invoices, amount of which is 3,000. Double effect completed. Okay, now number 10th entry, accrued interest on Salim loan. First we will see what kind of loan it is. And you can see it is loan 2. You have given this loan to Salim. So it's a favorable sort of thing. It means you will receive interest. So we will go to other income side. And here again we need another line. So let's increase. Since it was quite a lengthy question, so that is why first time we will have to create spaces. Here you will mention interest on loan to Salim and then add outstanding interest, and adjustment is talking about this outstanding. Look, accrued means outstanding 600. So just write down 600 of amount of interest which is still receivable. If you want to write exact wording which is used in the book, that is accrued. So you may use accrued, outstanding, owing, one of the same thing. That was outstanding interest. You will add first effect is completed. Then you will go to current asset side, and here you will write accrued interest on Salim's loan. Okay, this interest, since we will add, so just write down over here, and you need to write add accrued interest, and here we need to Salim is okay. How much is outstanding? That is mentioned 600. This was your last adjustment where it was said accrued interest on Salim loan. Outstanding interest, you have gone to your other income side and you have added it, and then you have gone to current asset side where this interest on Salim loan would be added in its loan. Alright guys, it means all 10 adjustments we have seen and with their dual effects entered in financial statement and balance sheet statement, except this seventh entry where GM is entitled to a commission of 10%. Since this 10% is required to be calculated upon net profit, so we will wait for finalization of indirect side to get net profit, and then we will take 10%. At that moment we will be entering these elements present in the question to their relevant places. First is building, which is your fixed asset. Here you will mention building in fixed asset side, and now we will be posting its amount, that is 165,000. Write down amount in front of it. After building we have furniture and fittings, which is also your fixed asset. Just write down furniture and fittings. Amount of furniture and fitting is 7500, so just put 7500 in front of furniture and fitting. Then we have capital, which is your fixed liability, and we have already reserved its place of capital. We will just put the amount 150,000. Write down in fixed liability amount of capital. Then we have opening stock, past of cost of goods sold statement. Again, its place is already reserved. Amount of opening stock is 24,000. So put amount over here. After opening stock, we have bill receivable, which is your current asset, and here you can mention bill receivable. Amount of bill receivable is 10,500. Post amount in front of it. After bill receivable, we have bill payable. This is your current liability, and you will choose this side, and it was bills payable. Let's post the amount, which is 7500. After bill payable, we have purchases. Place of purchase is also fixed. Here you will write 60,000 amount of purchases. Look, purchase 60,000. Then we have sales. Obviously its place is also fixed. Amount of sale is 240,000. So just put amount in front of it. After sales, we have sales return 4500. So it means we need one more line, because first returns were already present and now there is another type of return. So you will write less returns, amount of sales return 4500, put amount in front of it. Alright guys, sale return completed. Next, purchase return 1200, and we don't have the place of it. So here one more line for cost of goods sold as well. You can see that it was never happened before because length of this question is too much. Less returns and amount of purchase return is 1200. Put amount in front of it. Alright guys, then we have purchase return entered, and after purchase return we have royalty. Royalty is your direct expense. So it is first expense, which is direct. Royalty, amount of royalty is 10,700. Put its amount in front of it. After royalty we have wages. Let's correct its spelling, it's just royalty. And now wages are also direct expenses, and we will write amount accordingly. 10,000 amount of wages. Alright guys, in this way our left side is completed. This was last element present on left side. We will start right side. Account receivable, these are your assets, current asset, and we have not mentioned earlier. So here we are going to write account receivable. Amount of account receivable is 60,000. Put amount in front of it. After account receivable we have account payable, current liability, and here you will mention account payable. Let its spelling to be okay. Amount of account payable is 47,400, and you will write 47,400 as account payable. After it we have binding machinery. I think anything is missing. Depreciation. Okay, we don't have depreciation of any single asset. It's all right. So next is binding machinery. This is your fixed asset. Binding machine. I was actually looking for rate of depreciation, but it is not given. So it means all fixed assets are without depreciation. 13500. Write down in front of it. After binding machinery we have loan to Salim. It is part of fixed asset, or you may write it current asset because it is not mentioned, and we have already fixed the place. So here loan to Salim, somewhere we have mentioned. Let's see where it is. Yes, this is interest on Salim's loan, and here we will write Salim's loan. So inverted commas are needed. Let's try to edit it. So Salim's loan, okay, and amount of loan to Salim is 15,000. Here you will mention 15,000. Okay, then we have investment, part of asset side, and we have proper place of it. This is the place where we will write investment, 9,000. Mention its amount. After investment, we have advertisement, which is operating expenses. Advertisement is already written. Let's fix this place. And amount of advertisement is 16500. Mention over here. After advertisement, we have commission received, which was part of other income, and place is already fixed for it. Commission received, which is 3600. Alright guys, so we are going to write 3600 in front of commission in other income. Then we have drawings. So drawing part of capital, and here its place is also fixed. Reserved drawings 9000. Write down 9000 over here. After drawings we have salaries. Salary part of operating expenses, and here you will mention salaries, amount of which is 24150 salaries entered. Next, cash in hand is your current asset. Again we are getting little less space. I think we will increase one more line because after cash in hand we have cash at bank, so it means we need two more lines. So let's increase. Why it is not okay? Let's delete it so that we can have a proper place. So here we have got another line, and first line would be cash in hand and second line would be cash at bank. Both were given in front of it. First let's see how much cash in hand, that is 750. Put amount in front of it. Now we will see how much is cash at bank, and that is 10,500. 10,500. Oh, look at here, 10 skipped. That's very dangerous for us. Cash in hand 750, and again that's very sensitive matter. 10 more or less, that would be a bigger problem when we would solve the question. Okay, once again we are looking at it. Cash in hand 750 and cash at bank 10,500. Let's confirm 750 and 10,500. Okay, what left is last interest on Salim loan. This is part of other income, and there the place is fixed. Interest on Salim loan, amount of which is 900. Just put 900 in front of Salim's loan. Guys, in this way all 9 adjustment, that means all 10 adjustment except this GM commission number 7, and all elements present in the question have been entered. So we are now open to start our calculation. So first we will get our net sales. How? Amount of sales, then you will subtract first returns and subtract second returns. So we have got the amount of net sales. Next step is to calculate cost of goods sold statement. This is the longest cost of goods sold statement, but let's start. Opening stock plus purchases minus first return minus loss by fire minus closing stock plus invoices minus returns. So we have got cost of goods sold and there are two direct expenses. Let's calculate the total of cost of goods sold. First, simple cost of goods sold. Then we have two direct expenses, wages and royalty. We have got 51500. Alright, and sale amount is 205500. Direct expense cost of goods sold is 51500. And let's confirm it again. We will take sales, which is 2500, and then subtract amount of cost of goods sold statement. So we have got 15400. Let's check it out. Our answer, look at here, gross profit is 154,000. So guys, in this way, our gross profit, that means 1 out of 3 statements completed. Let's start calculations for second part, that is net profit. Look, advertisement was 16,500 and you will subtract, we have got 1500, salaries, and there are few other items as well. So let's calculate operating expenses first. These three are operating expenses. There is no other operating income, so 0. Other expenses, we have 7500, and then we have other income. It is needed to be calculated. First, amount of commission. Let's unearned commission. Secondly, amount of interest on SLIM loan and accrued interest. Here we will calculate total amount of other income. Here calculations are completed. Now we will be calculating dummy net profit or initial net profit, for which what we will do, gross profit minus operating expenses plus operating income. This is your 0 operating income, less other expenses, and then add other income. This is total of other income. So what we have got is 120790. I'm sure you people remember that there was one adjustment, 7. General manager is entitled to a commission of 10%. So you will be calculating this commission after this, and you may take commission over here. For that we need a place, so let's make indirect place over here. And now general manager commission you will calculate. And how would you calculate? Please note that 790 is your net profit. We will read it again. The adjustment was general manager is entitled to commission 10% on net profit after charging. This word is very important. After charging such commission. And I was telling you in previous questions as well, when it is after charging, it means net profit was already having this 10%. So instead of 10%, how you will calculate it, you will be looking over here. It's very important. General manager commission. Please see 120790. 120,790. It's not writing. Okay, no, we don't need. Actually, light was not here and it had come. So we may wait until then. Just listen to me what I was saying and we can correct its spelling. No, it's not editing since it was an online platform, and during that, if light is not available, editing would not be available as well. But here we can understand. Please note what we were going to do. If you want to calculate general manager commission and it has been written after charging such commission, so you will not take multiply by 10 divided by 100. You will not take it. Instead of 100, you will add rate of commission as well. And for that, what we will do, this is your amount of net profit 120,790 multiply by 10 and divided by 110 you will be writing. Let's try it if it can edit. No, it's not editing. Let's take it. Okay, so here we will be calculating. Oh, good. It had come back 120,790 and we will multiply 10 divided by 110. Just this thing is very important. 120,790 was your dummy net profit and you have taken 10%. How? By adding 10% into 100, because in net profit it was already included. So what we have got, this is our general manager commission, and simply what we will do, we will get new sum over here, and first we will write this commission at this place, and here you will be adding it, and this is 86. Here just add 86. Okay, we will be adding it, and now look at here, this was your net profit where commission was not charged. Now you have charged your commission, it means your net profit would be decreased. Oh, we have written it in other income, it is actually was other expense. Here you will mention, and this was not the place, and I need to correct spellings as well. General manager commission. Okay, in this way we have two other expenses. First, general manager commission and interest on capital. All right guys, now we need to calculate it over here once again because it was written over here. So 7,500 plus 10,980. So guys, have you seen that these were other expenses? Once again I'm telling you what we have done. Look, let's get back to adjustment. Number 7 adjustment was saying general manager is entitled to a commission of 10%. How you have calculated this commission, it is very important to know. And here I am telling you once again, this was your profit before commission 120,790, and you have taken 10 as rate of general manager commission and divided 110. This 110 is very important. Whenever you will see After charging such commission, you will use percentage plus 100. So 10 was the percentage, 100 was the original amount. When you will add, it would become 110. And since this general manager commission is supposed to be paid, it's an expense, other expenses increase, and you have finally calculated your net profit. So amount of net profit 109,809. Let's check it out from our answers. And here you can see 109,809 is your net profit. Second thing, since it was not present in question, we have just calculated. So you will be writing it in liability side as well. GM commission. We can round it off 10980.9, so we may call it 1. Let's see if any difference we will get. The net profit is 109,809. Same net profit we can write. This was the place which was fixed, 109,809. Let's see, 109,809. In this way, we are now ready to start our calculation for liability side. First, we will see fixed liability, and what we have is amount of capital. Then you will add net profit less drawings, then add interest on capital, and then subtract amount of drawings. In this way, final amount of fixed liability arrived. After that, current liability sum, we can directly take sum of all current liabilities. Let's see if reserve is present. No, it means 0. And it means our liability side is completed. What we have done, this was your fixed liability total, and this was your current liability total. And finally, we have got total of liability side 329,350. Let's check it out from our answers. And here you can see balance sheet 329,350. So it's happy moment for all of us. You were very patient, and I really appreciate whenever or whosoever is watching this lecture carefully and patiently. I promise that would be a level of understanding regarding financial statement would surely be increased. So one, gross profit ended, answer matched. Second, indirect side completed, answer matched. Now fourth part was liability, answer match, and now we will see the third part. No depreciations were present, so you can directly calculate sum of all fixed asset completed. Here we will see what is happening in current asset. First, closing stock, and then you will add return. This is your closing stock, and 6,000 was insurance money to be received, why it had gone away. Then sundry debtors, why we have not written sundry debtors. So instead of that, I think we have account receivable. 60,000 account receivable, they would be considered as debtors. So here you will write 60,000, and account receivable are not needed, just the difference of name. Alright, now let's calculate our debtor side. Prepaid advertisement, okay. Insurance money is okay. And here we will start our calculation for debtors. Look at here, 60,000 were debtor, but product were returned, so 30,000 would be subtracted. After that, we have Salim's loan, and outstanding is 600. In this way, it has also been completed. Finally, it's time to calculate sum of all current assets. So we have plenty of current assets. Sum is over here, and finally we were having investment as well. So there were three types of asset. This is sum of fixed asset. This is sum of current asset, then sum of investments, and finally we have 329350, and answer of balance sheet is 329350. Again, it's a happy moment for all of you. You can see that all four answers, without any editing, without any delay, all four answers we have calculated. Not only calculated, but they are absolutely matched with the answers given in the book. Here it was first side where gross profit was calculated 154, though I have zoomed out for 50%, but it is visible 154,000. And then we have calculated our net profit 109809. Here we have 109809. Then balance sheet 329350. And if you are not able to see, let's make it larger. So see, we have our net profit 109809, and here it is. Secondly, asset side or balance sheet total 329350 asset side and 329350 liability side. Guys, in this way we have completed our question number 25. This was so important for us to complete it in time. Although everything we have discussed in detail and in front of you we have sorted out and solved, but still I am requesting you very humbly to practice this question for more than 2-3 times, and after that if you still feel anything difficult, you are very open to share your problem through messages, text, or you can directly contact to share your problem. I will humbly be trying my best to answer your question quickly. So it's time to end our lecture. Thank you very much for your time, and it's time to say goodbye. Allah Hafiz.